Hi there, this is Bill with Smart Trades, and we're looking at the S&P here, um, and I'm going to review a report I made on Friday that I sent out to my clients, and also update that here on Monday, September 28th. At any rate, we've got the S&P on Friday's market here. Came down to our target, which was about 1035 to 1040. And there's a very nice five-wave structure, which we believe is in the C-wave position. Long story short, that combined with breadth and volume divergences indicated that a near-term bottom was likely. The extent of that rally still remains to be seen. Ideally, there's the possibility we may rally all the way back to the to near 1100 on the S&P. 1093 on the futures is the target that I'm looking at. Okay, here's the daily chart of the E-mini, and again we're testing previous resistance as well as a trend line, and that's what reversed the market here late Friday of the weekend and into Monday morning, the 28th. Just to review too, gold also had a similar pattern in that it carved out 5 waves down in the wave C position, indicating the probability that this decline is corrective, or at least that we're going to get a bounce back off of this low, correcting the decline. The alternate count is that the top is in and that this is the first wave down instead of wave C in gold. Regardless, there should be a bounce, and if that bounce turns out to be corrective, I would then look at the possibility that gold has peaked. But for now, I think that we're going to see a new high in gold as well, in the process of a longer term topping process, which isn't too far off, probably around 1050 or so. Here we go with the Nasdaq futures, or excuse me, the Qs, and same thing there. Good volume on the way down, but a divergence near the lows. So the possibility is that we peak, but I prefer one more new high, particularly in the S&P. Here's a bigger picture of the Qs, looking at the daily chart. Here's the hourly spiders. Divergence again, 5 waves down, and by the way, wave C was 1.62A, classic ABC textbook Elliott wave 101. And here we go with the bigger picture of the spiders. The spiders interesting here because they show the gap back in October of 2008, and that gap, it looks like the market wants to fill. Now, if it does, that target would be 110.34 on the spiders. That would coincide with the top of the wedge channel. Probably around October 7th or 8th. Should this rally that we're in continue, and that's where I'd be looking to sell this thing if it rolls over and we see confirmation, breadth, and so on and so forth, diverging against the trend in the spider 110.34 area. Plus, or take 50, half a handle there on those spiders, but 110.34 is the ideal target. Here's the bigger picture, again showing that spider weekly and a gap back in October of 2008. Okay, that's it, and thank you very much.